Hello everyone, welcome back to the Street School. My name is Shivagurunath. In this video, today we are going to see about how Nifty is going to perform on this coming week. As all we know, last 5 consecutive trading session, Nifty is in downfall. Nifty could manage to reach 18,500 but unable to sustain on the level. Finally, it reaches 18,114 on Friday. The question is how Nifty is going to perform on this coming week. Will it going to reach 18,500 or will it going to breach 18,000 or it's going to be in the flat mode? I'm going to answer for all of your questions. Before that, if you are just new to this channel, I would ask you to watch my entire video and leave your comment about the video in the comment section. If you do have any doubts or queries, please don't hesitate. Leave your queries in the comment section. I'm glad to clear all your doubts regarding option trading. If you have not subscribed to my channel, don't forget to subscribe my channel and click the bell button. First, I'm going to set you expectation. What are the things I'm going to cover up in this video? Initially, we will begin this video with we will go and find what are the strong and support and resistance levels in the Nifty. Once we find the support and resistance level, we'll go and find the historical volatility range for the Nifty for next 4 trading sessions. Then after, I'm going to explain what kind of option strategy I have used here, and I'm going to explain the thought process behind the strategy. And finally, I'm going to conclude this video by telling at what strike price I have built up my option strategy, and we'll go and see the payoff chart. Let's begin the session quickly. First, we'll go and find the strongest support and resistance of the Nifty. As we know, the last close of the Nifty is 18,114. The nearest resistance is 18,200. This is one of the very strongest resistance we can found near by last close. So after that, we will find 18,300 and 18,500. These are the very strong resistance level. The nearest support zone would be 18,000. It's one of the very strongest support zone. Once it breaches, we can find support near 17,800. So please make a note of that. These are the support and strong support and resistance of the Nifty for this week. Next, we'll go and see the historical volatility level of the Nifty. I'm sure you would have a good idea about what is meant by the historical volatility, and I assume you know the thought process about the historical volatility. If in case if you don't have a basic knowledge about the volatility, don't hesitate. I have made a separate video about the historical volatility in English, where I discussed what is the volatility, what is the thought process behind that, and how we can go and customize our stop loss by using the volatility. I have given explained in detail. I shared a link in the description, and please don't forget to watch the video. I'm sure that will be very helpful to enhance trading knowledge, especially about the historical volatility. So these are the historical volatility level, which I named it R1, R2, S1, S2. This is not a typical support and resistance level. Actually, R1 and S1 is the standard deviation 1. R2, S2 is the standard deviation 2. In order to understand easily, I named it as a R1 and R2. As we know very well, standard deviation is a statistical concept. It required basic understanding about the normalization concept. But here we are not going to look out any mathematical problem. Just we are going to see how we will interpret these numbers. Let me explain in the very simple way. So R1 and S1, which means I can tell you 68% confidently Nifty will trade in between 17,887 to 18,500 92. I can tell it 68% confident. The remaining 32%, there might be a chances Nifty might trade outside of those ranges. If in case if you do not want to take any chances, please don't opt for standard deviation too, where I can tell 95% confident Nifty will trade 17,545 between to 18,954 in next 4 trading session. But initially, I would recommend you to go and stick with the standard deviation one. When market breaches those levels, you can go and customize your trade according to that. So daily volatility of the Nifty for next 4 days, I made it in a percentage 1.93%. We can expect the volatility of the Nifty for next 4 trading session. We can also go and customize the stop loss by using this volatility level. For that already, as I said before, I made a separate video for that. Please go and do watch the video so that you will know how you can go and set up a stop loss by using the volatility levels. Next, I'm going to explain what kind of strategy, option strategy I have used here. Here, I have used bull call spread. So this is one of the simplest option strategy. So when we use this strategy, so what is our market view? So our market view is a moderate bullish. What I'm expecting is Nifty will trade in between 18,000 to 18,400. Since Nifty is in 18,114. So when Nifty comes to 18,000 level, I would ask you to initiate this strategy, which will really help you to book some decent profit. So what is the thought process behind that? This is actually a two-leg option strategy. Here, if market works our favors, we are going to earn fixed profit. Here, there is no unlimited profit. Market even goes 19,000, 20,000, our profit will be limited. At the same time, our loss also be a fixed loss. Since we have a moderate bullish view on about the market, if you go and create a naked position, that is a long call, if market goes against our prediction, you might lose all your premium. So if you use this strategy, you don't need to lose all the premium. So your loss will be limited. So that is the thought process behind the strategy. And as I said, this is a two-leg strategy. One, we will initiate a long call at the strike price of ATM. Another one is a short call at the strike price of OTM. Let's go on quickly discuss at what strike price I have built this strategy. So the last close would be 18,114 and the expected historical volatility would be 1.93%. And the PCR also 0.64, which is normal moderate mode. Actually, the expiry is 28th October. So as I said, this is a two-leg strategy. I initiated the one quantity of long call at the strike price of 18,100 and which is slightly in the money. We can take it as an ATM. The premium which we have to pay is 164. The expected target date would be 4 days and the implied volatility of the strike price 18,100 is 15.9%. And the Vega is 6.52. And I have initiated the one more short call at the strike price of 18,400, which is out of the money. We will be receiving the premium of 46 rupees and the target days would be 4 days. The implied volatility at the level of 18,400 is 14.74% and Vega at this level is 3.4. So what would be our maximum loss while using this strategy? That would be 117.95, which will come around 5,897 rupees. The maximum profit would be 182.05 on premium, which is 9,102. The break even is 18,217. Our target is 18,350. So, and this is a payoff chart for this strategy. So, as I said before, this is a fixed loss when market goes against our prediction. This is where we can incur losses. So, this is the fixed profits where market goes our direction. So the maximum range will be 18,400. Even if you go and hold it on 18,600, you will not get any higher profit. So it's better to close at this range itself. The break even point is 18,217. So where we will be start booking profit. One more strong recommendation. So as of now, Nifty is in 18,114. When Nifty comes to 18,000, I would request you to go and build this strategy, and you can go and customize your strike price. So as of now, I have chosen 18,100. You can also go and customize the strike prices, but don't forget the first leg should be in at the money, second leg should be in out of the money. So this is all I wanted to tell you now. Hope you will understand everything. If you do have a doubts, please leave your queries in the comment section. As I said, I'm glad to clear all your option doubts. Thank you so much for your time. Next, we will see you next video. Till then, bye from Shivagurunatha.